Understanding diminishing musharakah. It is a type of shirka where one partner purchases the other partner's share gradually. According to this concept, a financier and his client participate in the joint ownership of a property or an equipment or in a joint commercial enterprise. The share of the financier is further divided into units, and it's understood that that client will purchase those units periodically until all the units of the financier are purchased by the client. It is commonly used to finance fixed assets, such as house, car, plant, or machinery. House financing based on diminishing musharakah. This arrangement is composed of the following transactions. Joint ownership is created in the property between the financier and the customer. The financier gives his share to the client on rent. The client promises to purchase the financier's unit of share gradually as decided among the parties. Rent is adjusted according to the financier's share in the property. And finally, the client purchases all of the units of the financier. Procedure may be understood from the below example. The buyer approaches an Islamic bank who agrees to participate with him to purchase a house. 20% of the price is paid by the client and 80% by the bank. After purchasing the property jointly, the client uses the house for residence and pays rent to the bank on its share in the property. At the same time, the bank's share is further divided into a number of units, for example 48 units. The buyer promises to the bank that he will purchase these units from the bank in 48 months, and according to the contract, the rent payable to the bank will also reduce accordingly. The buyer will keep buying the unit and will keep paying the rent until the share of the bank is reduced to zero and the client's share becomes 100%. Types of diminishing musharakah. It is similar to musharaka with an additional feature of decreasing ownership of one party over time. It also has two types. Shirkatul Mulk, joint ownership of two or more persons in a particular property, and Shirkatul Akad, partnership effected by a mutual contract. Understanding mushar. It means undivided share or part in an asset. In diminishing musharakah, it refers to the partner's share in an asset in a manner that they cannot be further divided. However, it is allowed to lease mushar to the other joint owner. Diminishing musharakah under Shirkatul Akad. If one partner promises to purchase the share of the other partner, three conditions apply. The promise will not be part of a shirka agreement. The promise to purchase should be at value at the time of purchase, and if the promise is not fulfilled, then it can be forced by court of law. Diminishing musharakah under Shirkatul Mulk. Basic rule. If one of the partners undertakes to purchase the share of another partner gradually, then the sale or purchase of the musharakah unit should be at market value, which is its key difference with the other type. Diminishing musharakah considerations. The title holder will be joint, the profit rate will be fixed or variable, prepayment is allowed, refinance is available, asset risk will be joint, and late payments will be controllable. Diminishing musharakah for house financing. It is allowed under these conditions. The agreements of joint purchase, lease, and selling of units should not be tied up together. At the time of purchase, the sale should be effected through the offer and acceptance, and it is preferred to purchase each unit on market value. However, agreed price is also permissible. Islamic house financing under Shirkatul Mulk. The client chooses the house. The Islamic bank and the customer enter into a musharakah agreement. Joint ownership is created in the property between the bank and the customer. The bank's share is divided into units and is given to the client on rent. The client promises to purchase the bank's share over the tenure of the transaction. After taking possession of the house, the bank rent out its share to client through ijara. Diminishing musharakah for construction. We will understand this financial mode for the following four scenarios. financing to purchase a plot and its construction, financing for construction, financing for renovation, and financing for replacement or balance transfer facility. Legal documentation for diminishing musharakah. First, diminishing musharakah agreement. It establishes the bank's share in the musharakah property. The components of this agreement are share of client, share of bank, and details of the musharakah property. Second, monthly payment agreement. The bank gives its share to the customer via this agreement. The components of this agreement are rent schedule and formula of calculation. Third, undertaking to purchase musharakah units. The customer undertakes to purchase the bank's musharakah units. Components of this document are normal sale price and additional unit purchase price. Fourth, undertaking to sell musharakah units. The Islamic bank undertakes to sell its musharakah units from time to time. Components of this document are normal sale price and additional unit purchase price. Statement for diminishing musharakah. Consider a house financing example. The cost of the house is $1 million. The customer's share is 40%. The bank's share is 60%. The bank's rate of profit is 8.5%, and the financing tenure is 5 years.